what we just found out yesterday is that when you build 10 feet wall, actually, if you have enough engineers, you build an 11-foot ladder. And I think that's what China's just done. Inflation is political kryptonite. It kills all political careers. And by the way, this is why in Canada, Trudeau is being thrown out. This is why Macron has lost 2 back-to-back elections in France. This is why the Conservatives lost in Britain. It's Inflation is political kryptonite. When China joins you into an arena, it becomes the Hunger Games of capitalism. I don't know if you ever saw that movie, the Hunger Games. And maybe you get to win the Hunger Games, although it's a tough competition. Maybe you get to win the Hunger Games, but even if you win, you end up with PTSD.
Hello and welcome back to Soar Financially, a channel where we discuss the macro to understand the micro. My name is Kai Hoffman. I'm the @JR Mining guy over on X, and of course, your host of this channel. And I'm really looking forward to welcoming a first-time guest here on the program. It's Louis Gave. He's the CEO of Gavekal Research, and he's Hong Kong-based. So he'll bring a very different perspective to the conversation today, and it's really fitting and it's timely. We've had the DeepSeek, let's call it debacle in the markets today as we're recording this on January 27th. NVIDIA lost over $600 billion in market cap today alone. Just think of it as the biggest drop in market cap, I think, in history. It's an insane amount. If you think about it, if you write it down on a piece of paper, add all the zeros, it's a ridiculous number. We have to put everything a bit in context. Is the market overreacting? Is this the trend change that we might have been looking for on this channel, or is it just a nothing burger? And we'll discuss with Louis here in a few short seconds. If you like our conversations here on this channel, hit that like and subscribe button. It is tremendously appreciated, and it is free to support us. So thank you so much for doing that. Now, without much further ado, Louis, it is great to have you on the program. It's a pleasure to meet you. Happy New Year still.
Happy New Year. Thanks. Well, actually, from Hong Kong, it is almost Happy New Year. It's Happy New Year.
Almost.
It's Happy New Year tomorrow. Tomorrow's Chinese New Year. I want to say, did you ever see the movie Fletch?
No, I don't think I have.
Okay, because right now you look like Fletch, 6'5" with the afro, with the back that you got there.
I recorded an interview this morning with the Clem Chambers, and it was dark behind me, so it blended perfectly. And it was a great conversation piece. You should read the comments below. But I can't move. I'm in an Airbnb. I'm traveling this week, but it's a great conversation starter. Louis, I'm going to bring something on the screen here, maybe to start the conversation. And it is only January. The first month is over, but it's only January. What does the rest of the year have in store for us, Louis? Maybe to start off the conversations, what is the current state of the economy? What's the state of the financial markets right now, Louis?
Yeah, you're right. It's only January, and I think everybody feels like they already need a holiday. Now, fortunately, we in Asia are about to get one. We're about to get the Lunar New Year holiday. You guys in the West aren't quite as lucky. I think, look, you pointed out the 600 billion wipeouts in NVIDIA. I think that's ballpark. And you said, is it big? Is it not? I think it's really big. It's 600 billion is the size of Spain's GDP. It's roughly the size of the Mexican stock market. So yeah, it's a pretty big faceplant. But more importantly, I think it dramatically changes the narrative in the markets. Now, granted, this wasn't the only thing that happened in January. A lot of things happened. We had the LA fires. We had the Biden pardons. We had Trump coming in and not imposing tariffs on China, but instead beating up, Colombia and Mexico and Canada and Denmark. I mean, who had Denmark on their scorecard, right, for getting beat up? You had something else. I mean, this impacts us more in our part of the world than in yours, but essentially, China's Great Wall of the Internet came down, and it became possible for foreigners to start signing up for Douyin, which is the Chinese TikTok, for Xiaohongshu. So it's actually, if you think about it, last week, the biggest app on the internet was Xiaohongshu, which is, a Chinese social media app. And this week, the biggest app on the internet, downloaded app on both Apple and Google is DeepSeek. So, I think this dramatically somewhat shifts the narrative from if you look at the past really 15 years, the theme of the bull market was the underlying theme was U.S. exceptionalism. That U.S. had not only, of course, the advantage of having a reserve currency, but it also had um, the advantage of having very, very cheap energy, much cheaper than most other developed nations. And more importantly, it had these world-class companies that had formidable moats that nobody could, try to get close to. Um, and, the big question is this has undeniably been a super strong trend for the past 15, 16, 17 years. Um, the question is this trend now getting exhausted? Both because the valuation gap between the U.S. and everybody else has gone so big, because the policy uncertainty in the U.S. is now much greater. Long list of things, but for me, and I think for most investors, this is the question mark that all of a sudden everybody's having to confront.
Yeah, it's like the number one question that came into my mind this morning, like when I was reading the news, is like, did we underestimate China? It sounded like, and you said US exceptionalism, it sounded like the US had the monopoly on pretty much everything. And all of a sudden, there's this new app or a new AI model called DeepSeek that upsets everybody and upsets everything that we didn't think would be possible. NVIDIA is hurting. All the other AI companies are struggling, or not struggling, but like are being impacted. Some of the chip manufacturer, ASML, they're all being hit today. Do we underestimate China? Maybe is the question here. Do we?
Look, so I think the answer is yes. But when you answer yes to that question, first let me make a disclaimer. When you answer yes to that question, you immediately get accused of being a CCP shill or of being a victim of Chinese Communist Party propaganda. And to me, it's like, if I know I sometimes use this example, if you have a historian who says, look, the Tiger II tank was a better tank than the Sherman tank. It was more versatile, more flexible, and at the same time more resilient. Nobody accuses the historian of being a Nazi sympathizer. It's just a fact. Now, today, it is just a fact that China is leapfrogging the West in industry after industry. It's leapfrogging the West in automobiles. It's leapfrogging the West in nuclear plants. It's leapfrogging the West in batteries. It's leapfrogging the West in industrial robots. And I think, yesterday we just got a bit of a wake-up call because I think there was this feeling that, well, at least we still dominate software and we still dominate AI, and China is miles behind. And we've put up these 10 feet wall, right? I think the State Department was a high wall in a small garden. And what we just found out yesterday is that when you build 10 feet wall, actually, if you have enough engineers, you build an 11-foot ladder. And I think that's what China's just done. It's just shown, yeah, you build these 10-foot wall, doesn't matter. We'll build an 11-foot ladder. Now, when you say this, people call you a CCP show, but the reality remains what it is. Just like saying that the Tiger II tank was better than the Sherman tank does not make you a Nazi.
No, really good points. And like one thing that upset the market as well is the apparent cost of developing DeepSeek was $5.5 million. Although if hardware assumptions are correct, then that number seems to be absolutely wrong. But I think that's what shocked markets as well. Like, do we need billions and billions of dollars of investment if we can do it on the cheap? See DeepSeek. What are your thoughts on that? Like, how does that match what do you hear out of China?
Yeah, I just wrote a column for the Spectator for subscribers who might be interested on this very topic. Yeah, look, I think when the DeepSeek came out, there's essentially two questions. First, does it work or not? And I think by now the question is yes, it works. And then then immediately the second question is, okay, it works. So that's the first problem, because China wasn't supposed to be able, given the chip restrictions, given how far behind they were supposed to be, etc. They weren't supposed to be there. Now, then you get to the same question. The second question, which is yours, is okay, fine, it works, which wasn't supposed to happen, but it does. So they did build the 11-foot ladder. From there, how much did it cost them to build? And here, you're right. There's still a ton of uncertainty surrounding that question. But however much it cost, it probably didn't cost the $200 billion that that basically Microsoft, Amazon, Meta, etc., have blown into AI capex over the past 2 years. So suddenly, the realization is, hold on, we've literally allocated 100 billions of capex into AI over the past couple of years to basically prevent what has just happened, to prevent the arrival of bootstrappers, guys who do it with a piece of string and a piece of gum. And I don't know if 5.5 million is the right number, but even if it's 500 million, it's still a fraction of what these other guys have spent. So the whole idea that you spend a bunch of money and you build yourself a huge moat by spending a lot of money, that has just been blown out of the water. So that's number one. I think number two, and I've been doing China for 25 or 30 years. By the time China comes, if you're in an industry, let's say you're making cars, by the time China comes in with a product that's just as good as yours, typically you're screwed. I hate to use a bad word, and I apologize for that, but typically, China has a capacity to scale things up at a fraction of the cost as everybody else, so that the last thing you want to do as an investor, I think the last thing you want to do is be in competition with the Chinese, because they tend to have massive funding and basically unlimited human resources. I call this in many podcasts in the past, when China joins you into an arena, it becomes the Hunger Games of capitalism. I don't know if you ever saw that movie, the Hunger Games. And maybe you get to win the Hunger Games, although it's a tough competition. Maybe you get to win the Hunger Games, but even if you win, you end up with PTSD, and it's no fun. And I think what just happened yesterday or this past week with the release of DeepSeek is not only did China do something like build the 11-foot ladder that it wasn't supposed to build, it clearly did it at a fraction of the cost. And whatever the cost was will be driven down from here, because that's how Chinese capitalism works. And so this, I think, completely blows apart the whole premise that these guys can have massive moats. Like these guys, I mean Google, Amazon, etc., Facebook, Microsoft, that these guys can have massive AI moats by just spending hundreds of billions of dollars. That belief has just been blown out of the water.
Yeah, maybe touching on what you just mentioned, is this the end of the tech rally? Like the NVIDIA carried the S&P 500 like 22% last year, like 22% of the gains in the S&P 500 were made out of NVIDIA gains, right? So now NVIDIA is down tremendously, about 17-18% today. Is that the end of the tech rally? Is that the end of the S&P 500 booming? And should we maybe prepare for a harsher crash here?
So I think yesterday was a fascinating. Well, sorry, yesterday my day, today your day, because I'm morning Hong Kong, you're evening in the West Coast. It was a fascinating day on the markets, right? Because you had, I think you had, so out of the S&P 500, down more than 1.5%. Out of the S&P 500, you had more than 300 stocks that were positive for the day. Now this has never happened before, where you have the stock market down 1.5%. And the overall market, I mean, the median stock was actually up yesterday, and so I highlight this because in recent years we've had a huge divergence between essentially the S&P equally weighted and the S&P market cap weighted, for the very reason you highlight. NVIDIA going through the roof and Google going through Facebook and so on and so forth. If you look at the top 10 market caps last year in the US, were all up in double digits. Some were even up to triple digits, like NVIDIA, Broadcom. And this is a highly, highly unusual phenomenon. So, could we have a rotation, something that, looks a lot like 2000? If I think the parallel with 2000 is actually relevant, because if you were there for the .com boom, .com, like the internet, was a super exciting development. Lots of companies got funded. Lots of companies got funded on credit by suppliers. So, the Sun Microsystems, the Lucents, the Nortels, they all gave telecom systems, servers, whatever else to all the dot-coms. And then the dot-coms blew up. So they stopped obviously paying for the debt that they'd incurred. And those big companies, Lucent, Sun, Nortel, ended up all blowing up because not only did their income statement get destroyed, but their balance sheet got destroyed at the same time. Now, fast forward to today, I think in the past couple of years, the AI excitement has been such that anybody with a table napkin with a .ai plan in the Valley got funded. Lots of VC money going into AI. A lot of that money going into NVIDIA chips, into business models that just burn cash. But the premise was it's okay because these chips are in shortage, and they can always sell them back, and perhaps even make money on them selling them back. And again, I think this has just been blown out of the water. So long-winded answer to your question, I don't know if this triggers a broader crash, but I think we've started a hell of a rotation within the markets now. And if this is true, if you see this rotation, this should also mean that the U.S. should start underperforming because the European markets, the Asian markets were not carried up by this AI craze in the way that the U.S. was. So I think the global economic conditions are still fine. China's stimulating. Europe is about to stimulate. Japanese rates are still stupidly low. Chinese rates are now keep falling and are super low. So there's lots of sort of tailwinds out there. Doesn't mean the world completely implodes, but you could have a hell of a rotation from growth to value, from U.S. to international, from large cap to small caps, and that wouldn't be the end of the world.
Yes, some of the rotation we've seen today, and it was a bit puzzling because we've seen gold sell off, the dollar sold off, but bonds were rising. So the rotation obviously went into bonds, like the defensive instruments here, yielding about 4.5% on the 10-year, which is seemingly quite attractive. Like, is that where you see the money going? Is that where momentum is perhaps going?
Yeah, look, I think the sell-off in gold was actually very interesting. Now, last year, in a way, the gold story was perhaps somewhat surprising because last year should have been a year where on paper gold should have struggled. I mean, if at the start of 2024, you and I had this call and we had said, you know what, this year the US dollar is going to be super strong, and we're going to see the fourth down year for bonds, and long bond yields are going to go up a lot. We probably wouldn't have rushed into gold. Let's be honest.
Yeah, S&P 500, 25%.
Yeah. We wouldn't have rushed into gold. We would have said, oh, and if we had been told, oh yeah, by the end of the year, 10-year will be 470, DXY will be 109, and S&P will be up 26%. Do you want some gold? I would have probably said, yeah, no, maybe not this year. Maybe not this year. Yeah, I'll do something else. But it was a super strong year for gold, and so I think this is a super important question. Who drove all this gold buying? And I think a lot of this gold buying has been primarily, it hasn't been so much U.S. investors as foreign investors. First, of course, is the foreign central banks. I think when the Western world sees Russia's assets, we, the Western world, you're German, I'm French, you're calling from Canada right now. So we, the combined Western world, said, you know what, U.S. treasuries, European government bonds, they're no longer, well, they're safe depending on who you are, what passport you hold, and whether we like your leader. That was, so we changed the very nature of government bonds. Instead of having a system based on the fail-safe of government bonds, you can always trust U.S. treasuries. We said we can trust U.S. treasuries depending on who you are. And so all of a sudden, if you were China, if you were Saudi Arabia, if you were Qatar, you probably felt, you know what, I need to own less U.S. treasuries, more gold. So you started to see a lot of foreign central buying in that. But I also think, for me, one of the biggest anomaly in our system today that people talk too little about is the fact that China runs trade surpluses of $1 trillion US, $1 trillion with a T. That's just gargantuan amounts of money. Now, logically, the Chinese entrepreneurs who make this money, should be taking this money and basically recycling it domestically. But because they have so little confidence in policies and trade policy globally, in their own policymakers, what they do is they take that money and they buy gold. But, and this is where it gets interesting, is if those Chinese entrepreneurs that make the $1 trillion a year now start feeling a little more confident in their own economy, because you start getting good news like, oh, look at this. The US was trying to crush us technologically, but looks like we've, figured out a workaround. And maybe our economy won't be left behind on the technological highway. If all of a sudden you start building up the confidence of the Chinese entrepreneurs, then maybe that those Chinese entrepreneurs at the margin start to buy less gold and maybe start to buy more of their stocks. So I think actually there's a negative inverse correlation between Chinese equities and stocks. And so the past few days, Chinese equities have done very well and gold has done badly.
Do you think it is also something to do with the Chinese real estate market as well? A lot of people are saying, well, it used to be like concrete gold. Chinese used to invest in real estate like there's no tomorrow. Now that's shifted because they don't trust the real estate market in China anymore. Is that a fair assumption as well?
That's a very fair assumption. Look, China has capital controls. So if you're a rich guy in China, essentially you have, four main choices. You can buy real estate, which is what they did for 25 years. And then the government said, stop doing that. Prices are getting stupid. Houses are for living in, etc. So but you can buy real estate. You can buy gold because, gold trades freely in China. You can buy bonds, but now bond yields are 1.6%. So, now granted, there's no inflation, but it's still, not that attractive. Or you can buy stocks. And today, the yield the dividend yield to government bond yield differential is at a 20-year high in favor of stocks. But essentially, those are your four choices. Now, if you're very, very afraid, you're going to buy gold and bonds. And I think that's what Chinese people have been doing. That's how the $1 trillion Chinese trade surplus has been recycled. If you're starting to build up your confidence, then you're going to buy more stocks, and eventually you might come back to real estate. So that's, for sure, those are your four choices.
You made an interesting side comment just very early on in our conversation. You said Trump hasn't issued any tariffs on China yet. And I think we need to investigate that because it also is sort of perhaps linked with a TikTok ban that I'm still trying to understand. Like, is it banned? Is it not banned? Like, what's going on? I'm not a TikTok user, so I couldn't care less. But why no tariffs? Like, he's been super loud about it. And you mentioned perhaps the EV sector as an example, like BYD and others that are producing EVs on the very cheap. Why have you not seen those tariffs come into action or enforce yet?
So I think there's a few reasons. You're right. Trump during the campaign was like on day one, I'm putting all these tariffs and et cetera, et cetera.
It's the most beautiful word.
Most beautiful word. And I think most people expected that against China. They definitely didn't expect it against, say, Colombia. So what's happened? What changed? I think what changed is, and Trump has actually acknowledged this in different interviews. So when you look at how did Trump get elected and how did he win so massively? Because it was a very impressive win. How did he win so massively? Whenever you do the postmortem of an election, you can say, well, either the candidate was bad, or the policies the candidate advocated were bad, or the track record that they had to run on was bad. Now, arguably in Kamala Harris's case, you can make a very cogent point for all three. But when you look at the polls, what you find is that you had a 16 percentage point swing from Democrats to Republicans amongst voters who earn less than $50,000 per year. And those voters, they were primarily driven by inflation. I might be wrong, but I firmly believe that basically the big rise in inflation during Biden's term just crushed the Democrats' chances. Inflation is political kryptonite. It kills all political careers. And by the way, this is why in Canada Trudeau is being thrown out. This is why Macron has lost 2 back-to-back elections in France. This is why the Conservatives lost in Britain. It's inflation is political kryptonite. And so, and by the way, and again, Trump has acknowledged this. He's acknowledged that he basically won because inflation was out of control under Biden. So if that's the case, then that constrains Trump's ability to impose tariffs a lot more than, say, in 2017. Remember, in 2017, the first time he was elected, every policymaker was running around saying, oh my God, deflation's around the corner, deflation's around the corner. We don't want to go down the same route as Japan. Japan's lost decade. You remember it. I mean, it wasn't that long ago. The narrative today has completely shifted. Deflation is no longer the threat it was across the Western world. Inflation is the threat. And in a world in which inflation is the threat, sure, you can beat up on Denmark, and sure, you can beat up on Colombia. But China, if you beat up on China, you may end up, boosting your inflation again very, very quickly. And if you do, then you're going to crush your electoral hopes for the 2026 midterm elections. The Democrats are going to control Congress again. And as soon as they control Congress, they're going to throw impeachment. And you're going to go through 2 more years of that rigmarole that you'd probably rather avoid. And so I think this is why, Trump today is saying, look, I want to meet with Xi Jinping. I want to meet with Xi Jinping in my first 100 days. I'd like to visit China, or if he wants to come here, I'll invite him here. And I think he actually really wants to cut a deal with China. A deal that involves opening up Chinese factories in the U.S., a deal that probably involves a revaluation of the renminbi, a deal that involves China buying more stuff from the U.S., although the only thing that China would be really interested in buying is probably, energy and agricultural products. But if a deal comes, I think this will be very, very potent, actually, for Chinese assets, because again, you've got this $1 trillion surplus that basically gets recycled into Chinese government bonds and into gold. If all of a sudden it's like, well, we've got to deal with the U.S., things are going to be fine for the next 4 years. We're back on track. We're burying the hatchet. The Cold War isn't going to be a hot war, etc. Then Chinese assets can really, really take off. It's a big if, of course, but
yeah, it's like it comes back to the debate, like, are tariffs inflationary, right? And that's sort of like the premise is like you're basing your argument on is like, yes, they are inflationary. They're not. They're political suicide. Although it's like let's maybe spin this one further. Trump's got only 1 term, so why does he care, right? So like just
because I think he's here for a good time, not a long time. He knows very well he's got does he strike you as a cheesecake guy or a broccoli guy? Is he going to do the hard yards? He might. I think a clear clue of which path he was going to go down was the fact that Robert Lighthizer was not given a position in the cabinet. Now, Robert Lighthizer is very much the guy who argues, tariffs are not a means to an end; they're the end goal. We have to have tariffs to rebuild industry in the United States, and with industry, we rebuild a social fabric that has been absolutely destroyed. And yes, it might create some short-term pain, but for the long-term good of the country, it's necessary. Now, I don't know if Trump is like, oh, let's do short-term pain for long-term gain. I doubt that he is. The fact that he hasn't picked Lighthizer, but that he picked Scott Bessent instead for for Secretary of the Treasury, I think is a pretty clear sign that he's the latter part. Now, I want to be very clear about something. I didn't make a case that tariffs are de facto inflationary. I made the case that Trump won re-election because of inflation, and I think he's going to be very wary of taking that inflationary risk. Now, I think that Trump inherently knows that, yes, if you had tariffs and at the same time you massively tighten the fiscal belt and you massively tighten monetary policy, then that would not be inflationary but deflationary. But does he have the appetite to tighten the monetary belt and the fiscal belt while doing the tariffs? No, because that would put the U.S. into a depression. Um, and like, what's the political win in that? When again, he's here for a good time, not a long time.
Absolutely. Like he does want to play the long game, but the question is like, what is he sacrificing along the way, and what's the plan? I think the U.S. dollar is an interesting one because he doesn't want a strong U.S. dollar. He like to make America great again. You need to be able to export, meaning you need a cheaper dollar. Like how do you achieve that goal? Like when you talk about the relationships with China and like trying to keep them as investors on board as well. You don't want them dumping anything. Like how does he walk that tightrope? How does he find that balance?
So it's a tough question. um, the let me put it this way. I think when you're a politician, your first job is to first identify the right problems. Now, I think Trump did this by talking a lot about the deindustrialization of the U.S., by talking about the opioid problems in the old Rust Belt. Frankly, by picking J.D. Vance as his VP, that was a very clear signal. Look, I care about this issue of reindustrialization because J.D. Vance basically. He's a very picture of this. His whole book, The Hillbilly Elegy, he comes from the part of the U.S. that have been absolutely devastated by the hollowing out of U.S. industry. So first is identifying the problem. Now, once you've identified the problem, ideally you solve the problem. But solving the problem of U.S. deindustrialization is extremely, extremely challenging. It's extremely challenging for many reasons, not least of which the fact that, frankly, the U.S. no longer has those industrial workers. It's now been a generation that have been gone. And the problem with industry is you need the 40-year-old to train the 20-year-olds. Now, you're from Germany. Germany still has that. Germany has a big industrial base, and you've got the 40-year-old workers that train the 20-year-old workers, and knowledge gets passed down, and people, tinker at the edge and come up with new things as they tinker. There is that culture today in Germany. To some extent, actually, we still have some of that in France, but in the U.S., it's really been hollowed out. And it doesn't mean you can't rebuild it, but let's not kid ourselves. Rebuilding it, as we saw with China, takes 35 years. It literally takes a couple generations. So that's your second. So that's your problem. I want to reindustrialize, and doing it is going to be really hard. And by the way, devaluing the U.S. dollar 10% or 15%. I'm not sure that's going to move the needle. So then you get to the third problem. The third possibility is, okay, I've got this problem. I've identified it. I can't really solve it. So the next best thing, if you're a politician, is you want to be seen solving the problem. You might not solve it, but you want to be seen to be trying. And I think this is where we're heading, where Trump wants to sit down with China and tell China, look, open a factory in Ohio, open a factory in Michigan, open a factory in Wisconsin, and I can come in and cut the ribbon at the BYD factory and cut the ribbon at the Longhorn Machinery factory, and everybody wins. Everybody's happy. Now, this is a deal that China's happy to do, I think, and so I think this is where we're heading.
Will that keep China competitive, though? Like you mentioned, the cost advantage producing in China is definitely of significance here. But moving production to the U.S., like, does that increase cost, and can they stay competitive? Like, that's another issue I think we need to address because the U.S. auto industry is not really competitive right now.
Oh yeah, look, when BYD opens its factory in, let's say, Michigan, for the sake of argument, it won't be making sub $10,000 cars like it is in China. That absolutely, would crush any competition anywhere in the world. I mean, I always tell people, go to YouTube, go check out the cars. Best thing is if you can go to China. I think I always say there's two kinds of people in the world. There's the people that go visit China and come back thinking, and go visit the factories and go meet the companies and go see what is being done and come back thinking the future is being built in China. And then there's people who don't go to China, who listen to the people who say, hey, the future is being built in China, and who say, oh, this is a CCP shill. This is a guy paid by the Communist Party. So there's no doubt that, the sub $10,000 cars that BYD produces in China, it won't be able to produce in the US. So it's not like it's going to build those cars in the US and then ship them out to wherever, Mexico, Brazil, France, or you name it. Those cars built in the US will be sold in the US. But that's already, a very good market. And will BYD be more efficient than Toyota or be more efficient than, Honda, all of which have plants in the US? Yeah, probably, because, they produce cars with a lot fewer car parts. It will basically come down, for BYD, is do they produce ICE cars or electric cars? And if they produce electric cars, are they able to import the CATL? And BYD is perhaps a bad example because they produce their own batteries in China. But any other Chinese car maker, will they be able to bring in the CATL batteries? And if they are, then they'll crush all the competition. If they're not able to bring the batteries from China, then things will be not so competitive.
No, I appreciate that.
Again, it doesn't really matter. The point is, we built a factory here. There's now 20,000 workers at this factory, and you might say, well, that's not a great deal for BYD. They have to build a factory where they're not so competitive. Why would they want to do that? Well, they'll do that because they'll be told to do that.
It's to appease the gods, right? You got to bring a sacrifice here.
Exactly.
I'm not sure if it's the right analogy, and probably get torn to shreds in the comments. But Louis, I want to make advantage of the fact that you're actually China, Hong Kong based, and I'm curious, on the geopolitical side, what's the news? What's the sentiment out in China right now? What does it look like in terms of BRICS, potential BRICS currency? What's the talk of the town here? What are you picking up? What's being covered in Chinese media?
Look, I've written 2 books about all these questions, so I don't know how much time you have. How much time you have on this? If you put a coin in this machine, you may very well regret it. But let me take it as shortly as I can, because I tend to be long-winded. As shortly as I can. The BRICS currency, that's a complete red herring. It's never going to happen. China will never give up sovereignty over its own currency. Just ever. And neither would Russia, neither would. It's just not going to happen. I think it's this red herring that the media loves to bring out for, again, lots of different reasons, which I won't go into. But not going to happen. Having your own currency is such a powerful tool in terms of managing your economy. It's such a sign of your own independence and supremacy. Don't forget that China was basically invaded and torn apart by foreign countries, etc., between essentially 1860 and 1949. That China, just like Germany, went through a period of hyperinflation in the 1930s and 1940s, just like Germany did in the 1920s, and that this left deep scars on the population. So the idea of losing control of the currency is just complete anathema. So it's just not going to happen. Geopolitically, I think is actually, I would say, mild, with the emphasis on mild. I hope that the relationship with the U.S. can get better. I think there was a lot of disappointment when Biden came. When the Anchorage meeting happened in March of 2021, and Jake Sullivan and Anthony Blinken showed up and said to the Chinese delegation, look, you guys are a dictatorship, you're not a democracy, we don't want to have anything to do with you. At which point the Chinese foreign minister, Wang said, hey, why did I fly 12 hours for this? You could have done this over the phone. And then the relationship just completely broke down. Jake Sullivan was the only U.S. NSA director to never visit China during his tenure until Biden had lost, until November 2024. Then he visited China. Biden was the only U.S. president since Richard Nixon to not visit China. The relationship completely broke down. And the belief is, look, with Trump, it's going to be tough negotiations, etc. But at least the door is back to being open. at least Trump isn't calling Xi Jinping a dictator each time he gets a microphone. At least you have, yes, Rubio is not a fan of China, but there's the perception that you can have a discussion with Rubio. With Blinken here, you had a Secretary of State with Blinken that didn't meet with Lavrov once. Like, you have a war in Europe. Russia is part of that war. And for 4 years, he never meets the Russian. Like, what's the point of having a diplomacy, having a State Department, if they don't do diplomacy? If all the diplomats want to do is, meet with Germany and with France and with Canada and, get together in a circle and sing Kumbaya, what's the point of that? You have a diplomacy to talk to people you don't get along with. So there is the hope that, with Trump, things get back to a more adult footing. And I think there's a lot of signs that this will be the case.
Yeah, like just the words he's been using, like, oh, we have a great relationship, and
No,
he's a great
opening a lot of doors.
leader. Like, he's been using a lot of adjectives to describe Xi Jinping as well.
Yeah,
So
no, he's opening a lot of doors. Opening a lot of doors. I think he clearly wants to make some kind of deal with China. Now, we'll see if the deal is attractive to China or not. But there is the possibility to get the relationship on a better footing than what it's been for the past 4 years.
no, absolutely, which could be significant for the markets in general, and to maybe bring us back maybe a little bit on the globalization track here, instead of just everybody doing their own thing here, because we need to work together on the commodity side. There's no way around it, and we're sort of stuck there, as we're stuck on one planet, right? Louis, maybe final question for you. Like, you're based in Hong Kong, so I do have to ask, like, what is something that we're in the West like completely misunderstanding about China, or something that we don't have on our radar screen that we should be paying attention to more closely?
Well, I mentioned how China was leapfrogging the West in industry after industry. I think by this point, what I find fascinating, and again with like DeepSeek yesterday, is the first response of most Westerners is, oh, but China just steals Western technology, and then you're like, okay, hold on, they're running 450-kilometer-hour trains. That's like 100 kilometers faster than anybody. Like, who did they steal that from? XPeng is literally producing flying cars. Like right now, go YouTube, type in XPeng flying cars. Who did they steal that from? You have autonomous driving now in a number of Chinese cities, which, by the way, I think if AI was the big excitement of the past couple of years, there's a good chance the next new thing, the new excitement in the market, will be autonomous driving. But it's not a given that that's being led by the U.S. You have a number of cities, Wuhan, Zhengzhou, others, where autonomous driving is now becoming very, very prevalent. But I think we have to go past the mindset of, if something good comes out in China, that must mean they stole it from the West. The reality is that China today produces more engineers than the rest of the Western world combined. And with that does come technological developments, does come progress. And I think it's both condescending and self-defeating to bury our head in the sand. Now, did China steal a bunch of technology 10, 20 years ago? Absolutely. But again, they've now passed us. They've leapfrogged us. And unless we step up our game in terms of producing more engineers, unless we step up our game in terms of, frankly, just working harder, this gap that is now starting to grow in China's favor is going to keep growing and growing and growing.
No, absolutely. Like, I really appreciate those insights there, Louis. And maybe one very final question, maybe a bit of personal question. I read your bio on the website, and I had to chuckle a little bit. And please don't take it the wrong way, but your bio says French Army and Paribas. So it's like you threw that into one sentence. I was like, okay, it's like you're in the trenches on both sides here. Like, it's like you threw it into one sentence. I was like, okay, it's pretty much the same thing here, right?
Fair enough.
So I thought that was interesting. Like, Louis, where can we follow your work? You mentioned you write for The Speculator?
No. It's The Spectator. Sorry. No, I just wrote a column. Spectator, it's a British magazine. It's actually the oldest English magazine in the English language. But I just asked me to write a column on DeepSeek, so I did. if people want to find out about us, the easiest place is to go to our website, gavekal.com, gavekal.com. I am on Twitter. My handle is @gav.vincent, which is my middle name. I'll post things occasionally. And yeah, I can be reached through email. My email is louis@gavekal.com. But the easiest is, go to the website.
No, fantastic, Louis. Really appreciate the conversation. Appreciate your time. We'll have to do this again soon. It's really interesting. Like for me, it's like I haven't traveled to China in like 15 years. So for me, it's a bit of a black box. So it's always good to get some insights from somebody who lives there. So I actually have to go. Yes. I actually need to go to Norway, see what the EV adoption looks like. Apparently, it's 95% of the cars are all EVs. I'm curious what that looks like. And China, Japan, like very different markets from the West in terms of like consumer electronics and very different things. So really appreciate it, Louis. Thank you so much. And to everybody else, thank you so much for tuning in here to Soar Financially. I hope you enjoyed this conversation. I tremendously did. Always love getting a different perspective on things. Like that's how we like to look at things here at Soar Financially. Touch on as many angles. Some you agree with, some you don't. But we're trying to provide you with a holistic picture and just educate. Like this is not financial advice, obviously, but we're trying to educate. So if you enjoyed this conversation, hit that like and subscribe button. It helps us out tremendously, and we do appreciate that. It's a free way to support us as well. So thank you so much for that. We'll be back with lots more here on Soar Financially. Thank you.